I wanted to also talk to you about a study that we launched in September with the help of Saracen Bank and Highland Good Steward Management. And this is the second round of the high net worth individuals and sustainable investment survey that we do. In the high net worth market, we define it as individuals with more than $1 million. That seems to be the kind of worldwide way to look at this. And in terms of the scope, it's European focused. We surveyed 420 high net worth and wealth managers, both in the private bank community and in the family community itself. From that, there was this type of market, still small, huh? But if you look at the data now, roughly 11% is what our calculation was in terms of sustainability assets in the high net worth space, with a growth curve that corresponds to something like 15%. Before we did the study some 2 years ago, there was more of a split about how do people perceive sustainability investing, between it being an asset class, an investment style, financial discipline. And this breaks out wealth managers versus the actual families themselves, the high net worth individuals. And you can see this sort of disconnect, and that the family community really thinks of this as requiring a financial discipline, as opposed to, let's say, some of the wealth managers would still have sometimes seen it as an asset class to its own. Part of that being thematic investing is a very popular piece of the SRI trend in this area. But I think that as an idea suggests where it's going in terms of, if you want to have the clients in this space, you need to actually talk about it from a financial orientation with ESG factors embedded in your discussion. And not just as, oh, take a product that's thematic, here's a clean tech fund. I think it's a much bigger discussion and probably more detailed. And that was interesting. Another one that I found interesting to share with you is what I call the toe dippers to the shallow water swimmers. If you look at the share of the investment, sustainable investing, in their portfolios, the majority, and again, this is now comparing years. So the green is 2009, the reddish magenta is 2007. So what's happened is, last time we did the survey, the majority were saying, oh yes, it's a very small allocation, something like 1% or lower. What we see over time, though, is that toe dipper community, if you look at now, say the greens going through here, are starting to rise above the other ones, which in our assessment suggests that there's this sort of shallow water effect. That is, and this is what they told us anecdotally, when they learn about this space, they say, sure, I'll try something. And then as they start to get comfortable with what is sustainability investing, how do you do it, look at other asset classes, they slowly make their way into the deeper side of the pool. So we found that to be quite encouraging as a trend line. And I mean, you do see some of these families that we met with that say, yeah, you know, actually it's over 50% of our portfolio is in sustainability. It's across all our asset classes, and it's something that we believe just adds value while helping us with risk management. In terms of the wealth bands, there's definitely a different mentality between the inherited wealth and the more entrepreneurial wealth. The inherited having this idea of societal responsibility, whereas the entrepreneurial more about, I really want to be part of the green revolution, I want to be part of the solution. So they're coming at it from different backgrounds and therefore in a way different product requests. And the other thing that I was really reassured to see is really the whole idea of, is this philanthropy or not? That question has really moved to the side from the earliest forays we had in this area in 2005, when people said, oh, well, you know, maybe we'll do this instead of philanthropy, or maybe we'll combine. Now what we see is they're saying this is just an investment approach, and philanthropy is something else we do that's different from this area. And I was interested in your question about how many women are in the room. They play a key role when it comes to the families. One of the things we heard is that there is a correlation between those who do sustainability investing and the fact that women have played a role in bringing that up as a subject of interest into the family discussion. So we thought that would be an area that would be interesting to do some more work on to actually understand what that means over time. But for the moment, all we have is this sort of suggestion that yes, there's some correlation there, we don't know how much.